Everyone, fantastic panel tonight. Sorry, it was a bit of a late start. Really interesting contributors, and I'm going to first of all thank Bill Wyatt. Do you want to come and say a few words, Bill? Bill,
I'm with Shepherd Mullen, and we're happy to sponsor these events and welcome you all. This is a little bit closer to what I do in the banking business, so I'll be very interested to hear how technology is going to change everything that I've done for years.
thanks Phil, and thanks Shepherd Mullen, and thanks OFX. And we're going to pass it over to Mark now, and he's going to help all the panelists, massive panel, to introduce themselves. Thank you.
Great. Thank you, panel. Thanks, everybody, for joining. I know we're competing against the one of the more recent Democratic debates tonight, so certainly the subject matter here will hopefully be more interesting and truthful. But I'm Mark Rager. I've partnered with FinTech Silicon Valley. I have a company called Next Stage Partners. We work with early stage companies in the FinTech space, usually seed round, and help from a sales, marketing, and business development perspective. So I see some familiar faces in the audience tonight, and I'm going to ask each of the panelists to go down and introduce yourself and kind of a brief background. We have a very broad topic tonight called banking technology, and we're going to try to drill down on a few different aspects, and we will have opportunity for audience question and answer too as well. Sarah, if you want to start.
Yeah, my name's Sarah Nefelian. I am on the team at Varo Money. I work in the product, focusing on growth, acquisition, and engagement of our users. My background is strictly in FinTech, as I've worked previously at Acorns as a founding PM there, building out an investment platform for everyone, and also done some work in Auto Gravity in lending marketplaces.
Great.
Thanks. Hello everyone, I'm Shreyas. I'm a CISO at Deserve, and Deserve is a credit card platform for launch, origination, management, and customer support, the end-to-end credit card as a service. And before Deserve, I worked at Uber for 4 years doing FinTech and credit card security. And I advise some companies, and I also sit on the board of Texas A&M University Department of Computer Science.
Hi everyone, Josh Roy, part of, I don't think this is working, but I don't think it's necessary. Work with Bank of the West.
Good problem.
There you go. Yeah. Work with Bank of the West, part of BNP. Lead open innovation there. Background, I've been a banker, spent a good chunk of my time, 10 odd years with Citi, was part of the venture team, also did an e-commerce startup out of New Delhi, and have been in the FinTech space here since 2012.
Okay, I'm Steve Kirsch, I'm CEO of M10. What M10 is doing is solving a couple of problems. One is payment rail modernization, so think about the plumbing that moves money from Bank A to Bank B to Bank C all over the world. That plumbing is very old and it has a lot of problems. So it can sometimes take maybe 7 days, 2 weeks to move money cross border, depending on what banks intercepted and have to do the AML CFT on it. And so what we do is we create modern rails, use digital ledger technology, shared ledger technology, so that it basically money moves direct between Bank A and Bank C, or Bank A and Bank B, without any correspondent banking or nostro accounts or any of the things that bankers hate. And so that's modernizing the underlying infrastructure. And the other thing that we're doing is essentially allowing people to have digitally signed APIs to be able to move money so you can move it like a cryptocurrency.
Hey, Ken Krushka, founder and CEO of Snapcheck. We are on a mission to eliminate paper checks, help businesses cross that digital divide into a world of electronic payments, looking at use cases around paying vendors, suppliers, contractors, employees, Myself, I've been in FinTech now 19 years. Provide the first mobile remittance service in the US. We're the first to send a dollar around the world by mobile. Been in banks, been in financial investment management houses. So it's an exciting time now to see all of the change that's happening in banking.
Hey everyone, Manish Joshi here. Been in the technology space now for a little over 15 years. My last 2 stints have been in FinTech. So I was working in Wealthfront. That's really squarely in the robo-advisory space. And then my most recent stint was at MoneyLion. I was their VP of product. We were a consumer finance product with the focus really on the middle class of America. So these are really the 70 million Americans who have an average credit score of about 640, have maybe about $1,000 in their savings account, and these are folks who probably couldn't even come up with $500 in an emergency. So that was really our focus there.
Hi, I'm Jason with OFX, and we are a 20-year-old disruptor in the foreign exchange payments group. So we send money around the world for individuals and small, medium-sized businesses at better rates and quicker. We've been working with other financial institutions such as banks and other neobanks, helping them offer our rails and leverage our 20-year-old platform that's doing the job really well for the international payment side of it, and it's an easy plug-in for them. So that's what we've been doing. I've been in FinTech for the past 10 years, almost, starting off in the crypto, Bitcoin, and I didn't put enough money in there, that's why I'm still here.
Although it's done really well last month or so.
It has. I picked up at 3,500 again, and that's paying off.
Nice. Great. There's a few things I wanted to kind of cover as there's a lot of different services that are represented here that reside in banking today, or a new form of banking that the average consumer doesn't necessarily know about or think about when they go into a traditional bank relationship. And I think there's 2 avenues here. One is a traditional bank relationship that resides in all the usual suspects that have a branch on every corner. And then there's the new upstarts, like Avaro, that appeal maybe initially to people that don't have banking relationships or are looking for a better way to manage their money, and they're not necessarily trusting of a traditional bank, or maybe the traditional bank isn't really interested in them. But I'm just, maybe Sarah, if you can kind of kick things off a little bit and talk about some of the ways that you see the 2 worlds kind of melding together in terms of how you started and where you see the future of your customers.
Yeah, I can talk a little bit about more. I mean, the genesis of Varo really was to meet the needs of consumers that were, maybe underbanked and overcharged. Mm-hmm. And while there's a great fragmentation of services to meet the needs of those consumers, it might be check cashing, it might be a prepaid card. Varo was one of the first places that provided a real central demand deposit account for those users. And while we're full digital, we have no bank branches. We're able to, use the savings on those overhead costs to invest more into product research and software improvements that meet the customer needs, a little bit ahead of where traditional banks would. So you'll see that, while some consumers come to us because they don't have a bank, there's, I think, I read a stat recently, 30% of the younger generations are not happy, or, only 30% of younger generations trust a bank brand. And so these people are going to come to us because we're going to act in their best interest and will be, the central brand that they associate their money with.
Great. And Josh, coming from a more traditional bank, can you talk a little bit about maybe some of the threats that you see from the technology that's being developed and marketed directly to consumers versus a more traditional bank relationship?
Sure. Actually, I think there's a senior member of the executive team from Bank of the West that is now at Varo, or was at Tigo. I think the banking industry has been talking about for a while, sort of the disruption in fintech, mobile money, new customer experience, And for a while, I think there was a lot of adversarial sort of, banks will be disrupted, etc. I think that has shifted really a little bit. The big banks are investing enormous amounts of dollars, time, and resources in upgrading their platforms. And a lot of them are also collaborating and partnering up for specific capabilities with, we were talking about money movement. OFX is a good example. So I think as you see through just a natural evolution, old legacy infrastructure over a period of time will continue to get better and invested in, and you're going to move from on-prem into cloud, and you're going to upgrade your capabilities. And specifically with the focus on FinTech, there's a lot of companies that are actually banking on the fact that they're going to collaborate and grow with the banks than just direct-to-consumer offshoots. Like if you're looking at Chimes or Varos, or there's a whole generation of consumers that I think, as to Sarah's point, will prefer a non-traditional banking relationship, but there's always going to be the traditional sort of financial services sector as well. And I think at some point there's going to be convergence.
Ken, do you want to comment a little bit, because what you're talking about with SnapCheck in terms of, is that a service that is going to be available through the financial institution? What is your plan for that particular type of service?
Yeah, so our approach, right, we're tackling business payments, and the way that we've structured our platform, fits very naturally into a payments hub that a bank may offer, but can also work independent of a direct integration into the banking establishment. So we've kind of pulled a little bit of magic there on being able to ride two horses at one time. So the key that we look at here, though, is, like I said, we're on a mission to eliminate paper checks, which still constitutes about 2/3 of business payments today in America, roughly about $25 trillion. So it's pretty crazy. But how do we move that user, right, that low-level employee and accounts payable, to say, I'm going to do something different, right? And that's, I think, a real key, is that it's not about technology, it's not about infrastructure, it's about humanistic needs and feeding into those needs and helping them see that there is a better way, and giving them an easy path to get there that is as risk-free as possible. So that's the approach that we take into payments modernization, because it is a long game. Right, people have been trying to get rid of checks for about 73 years, and it'll probably be another 73 years before they're finally gone.
Okay, and I just comment on something like that. I told this story once before on one of the panels. The opportunity to work with a major bank in the U.S. to talk to them about the concept of a checkless debit card that would allow people access to their ATMs, allow people to have a direct deposit relationship, allow people to not have to take the bus across town to stand in line at the bank on a Friday to cash their check and walk around with cash. And there were so many people in that room when I'm talking, and they're all shaking their head except for one. And it was the guy that was responsible for and was compensated by how many checks they cashed. And he got really upset in the middle of the meeting and said, wait a second, if you're talking about eliminating and reducing the number of checks we cash, I have a problem with that, because I'm compensated on how many checks we cash. So I have bad news for that guy. But let's talk a little bit about some of the other services, and I'll just kind of leave this open to whoever wants to grab the mic. Some of the challenger banks, neobanks, are very platform specific today. Debit, for example, versus credit, or both. You don't necessarily go into one of those to get a mortgage, or even to get a car loan. But those are services that will eventually evolve. And I'm just kind of curious, if you look at the fact that all banks seem to want to become a FinTech and FinTechs want to become a bank, what are some of the services today that you see in a traditional bank that either won't be necessary, in terms of being offered to the consumer, where you see the, two questions here. One is like, what are services that we'll no longer need that a traditional bank is offering? I have one idea if nobody speaks up. And then, from a neobank, what are the areas that you see those people evolving to? What additional services? Sarah?
Well, I could speak to, I think, some of the paradigms that we'll no longer need, that exist in banking that we'll no longer need. And, while Varo and a lot of these digital challengers do focus on the DDA relationship, that primary bank account, one of the main reasons for pursuing a bank charter is the ability to then expand those services and fit all of the services that a customer might need throughout their lifetime, from checking and savings to mortgage and credit card under one roof, and have that main 360 relationship. One of the paradigms that will no longer exist, I think, is this notion of the separation between a checking account and a savings account. And the inability to easily, pay interest into one or the other of those. And some of the kind of staid policies that banks have to follow to regulate those difference between those two accounts. And it really brings no benefit to the consumer to restrict the number of transfers you can make out of your savings account on a monthly basis, especially when people live in such a, their cash flow habits are a lot different than they were in the past. Especially when you look at somebody who's a worker, the average worker 20 years ago versus a gig worker today.
Sure. Raj?
Yeah, one of the key sort of delight scenarios that we would always talk about at My Line was, imagine you're at line to pay for a large purchase at Walmart. So you go to an app like My Line, you sign up, you get it instantly approved for $500 loan, let's say. By the time you hit the cash, that loan then gets dispersed into your checking account instantly. And then by the time you hit the cash register, you can actually pay for that purchase without actually needing a physical debit card. So there's a lot of sort of aspects there in terms of kind of, the instant disbursement, the instant kind of approval for the loan, which, when you look at larger banks, a lot of that is just not possible, right? You look at sort of the way that they do underwriting for loans, the latency in payments, as it exists today. We see the future really being that scenario where everything is instant and the user has access to funds immediately. Something that many of these challenger banks are kind of striving for, which some of the larger banks, because of whether it's risk-related issues or just technology, are not quite able to, offer that.
That delight scenario is actually a great one, and just Varo was able to launch last year. No fee overdraft, which was something that shifted the idea of an overdraft fee to then an opportunity for us to extend, buffer or credit to our customer in real time, so that rather than being at the point of sale and being declined or being charged a fee on top of something that they, didn't have cash for, to be covered and have a way to repay.
Yeah. Steve, any comments on services that you see banks no longer needing to offer down the road?
I was going to suggest the overdraft fees, but you beat me to it. So that's kind of the obvious thing, and I agree with all the other things that were said, but nothing kind of hits me.
Okay. I would make a comment about the real estate that banks have today. What are they going to do with the branches? And how many people have a traditional bank account? So I'm not saying you do it. Okay. So almost everybody. How many have been to a bank branch within the last 90 days? Okay, about half. All right. How about in the last 30 days? Okay.
To use the ATM.
Yeah. Well, that doesn't count. The ATM could be anywhere, right? Yeah. So the actual physical interacting, and I think the one of the pieces is compete or complement, right? So I think the one of the questions, and we were talking kind of before we started today, you've got a lot of FinTechs out there that could be really interesting to a traditional bank down the road. And that down the road could be tomorrow, it could be in 5 years. But from a compete versus complement, when I say complement, meaning they're either going to do a better job than the traditional bank, or they're going to be acquired by a traditional bank. Any comments on that in terms of companies that you see maybe at risk or particularly strong that are going to continue to grow?
I have a quick comment on the
Yeah.
branchless.
Go ahead, yeah.
Just maybe well over thanks, but I think that's a really interesting thought experiment of all of the real estate and physical spaces that we have taken up by bank branches today in pretty central locations, and what are some of the things that could take its place. Like I think there are a lot of kind of civic services and I think you can already see that there are, you know, retail and housing opportunities being taken into these physical spaces.
Yeah, on the compete versus complement, I think we've seen that ourselves. We started off 20 years ago, and it was definitely more of a competing mindset as a new FX provider. And over the last couple of years, it's definitely turned into more of a complement. We always sit on top of the banks anyway, so we've always been working with them, so it's always an interesting relationship. But it's definitely been more of a, as the banks, this gentleman from Bank of West said, that they're seeing what's going on in the market, and everyone's seeing that it's obvious now. So they're looking for service leaders in different sectors to help work with them, and obviously that's great for anyone that does that, right? That's an easy win for both sides, and it's an easy win for the end consumer too, because they're getting all the benefits of the new shiny kind of cool digital aspect in their trusted local bank. And we also see the pendulum swings like a little bit like pure digital. And then we notice a lot of people like that interpersonal interactions as well. We've got a lot of employees from around the world that are in very digital places, and they come here and they go to a branch to open up an account. And like, oh, I get it. That's actually really nice. You go in, you meet someone, they tell you about all the different things. I didn't know mortgages do this or do that, right? Because self-service means you have to really self-serve yourself, and there's a general population that can do that, and a lot of people want to be served too, and I think that's another interesting angle that we're seeing as part of the benefit of the traditional bank too, that they offer that too.
Yeah, I was just gonna add, I think there's a couple other aspects to think about that is interesting about this, which is, you know, if you look at Asia, you know, you look at some of the super apps, right? So we've sort of companies that have, you know, started with payments, but now pretty much are pervasive. A consumer does their shopping, they're buying, their everything on these apps, and you know, a lot of them. You know, Amazon's a good example as well. That there is now physical as well as digital. Even the ones that started digital have some physical. And I don't know the question, you know, in my mind, it's in the US from a branch standpoint, yes, there's a lot of real estate and it's not well utilized and it's expensive. But I think there is, the right answer is not going completely digital. Mm-hmm. Because if you look at things like advice, specifically when you think about wealth, there's always a graduation. So there's a certain amount that you will do that you're comfortable with online, but then beyond a certain amount, those assets moved to a place where there is an advisor, there is an RIA, and I think that, you know, where that gap is and when that gets bridged completely, as some of that has moved in Asia. Here, I don't know what that timeline looks like, but I think there's at least right now, there's room for both digital and sort of the relationship-driven banking.
Yep. Great. The comment or discussion relative to cybersecurity, and if you get into some of the automation that banks are looking at, the ability to make trades, the ability to open an account or pay a bill, what are some of the things that you feel like we still haven't cleared from a cyber security perspective that might be prohibiting from some of those moves, or how do you see that moving forward?
Sure. In security, there's always a trade-off. And if you think of a time when there was no online banking, then it was very hard to commit a fraud. You have to physically walk into a bank, get a token, your signature will be matched and you are physically there, your picture can be matched. And as long as I remember in my earliest banking experience, you could go to your branch, not like any branch in the country. So obviously the chances of fraud in that kind of situation is much less. But obviously the need of speed and efficiency and scalability, we move towards online, digital, and so as we go online, there are increasing risks, but then each product or each service has to be threat modeled and designed in a way that while there is no way to 100% eliminate the risk, but if we, as long as we want innovation, we want growth, we want instant services, money transfer, then each service has to be carefully designed to a level of risk the issuer or the bank or the company is willing to take. But in the end, nobody wants to have a security breach and a lot of fraud. So security is important, but it should be designed specifically for the medium. There's no one solution. For example, if you're designing a security or let's say password rules, think of a user who is trying to type a long, very complex password on a mobile device. So the burden is more than a user of a computer or a laptop. So security has to evolve and has to move with the times of the specific need and what of the audience.
Mm-hmm. Steve, on some of the movement you're talking about with digital money, can you talk a little bit about the way you're addressing security and the password needs or lack of password, or what are some of the changes you see there that are making that a little bit easier?
Sure. So passwords are terribly insecure, and so we use all digital signatures for any of the operations that we do. And so that creates something called end-to-end security, where the customer digitally signs it in a device that they control, and then the bank far end verifies that signature. And so anything in between, then it can't be compromised. And passwords are terrible because the bank has a copy of the password. Someone breaks into the bank, they get everybody's password. People think of dumb passwords. Passwords are fairly easy to guess and break, and I'm sure most of us use the same password everywhere, and all of these bad things with passwords. They were invented at MIT 50 years ago. They should die a death, but they just happen to be super convenient because we don't all carry around crypto devices with us. But we do carry around a nice crypto device that we all use, which is our mobile phone. And each of these mobile phones, if you have an Android phone or you have an iPhone, you have something called a secure enclave inside the phone. And that has a digital secret inside of the enclave. And that digital secret never leaves the enclave, and it can only be accessed by your biometrics or your 4-digit PIN code. And if you have enough bad attempts, that it basically locks you out. And so it's being able to sign things with your phone, or maybe you have a Ledger Nano device or what have you because you're into crypto. But the point is, there are these devices that make things very secure. And so when I do a Face ID on my phone, that is like super secure because that can then invoke a digital signature to approve a transaction. And so that's the kind of security that we use for transactions. And the banks, unfortunately, are very behind the times in terms of being able to accept digitally signed transactions. And I should be able to put my public key on file at my bank, and I should say, hey, look, if a transaction comes in and it is digitally signed with my private key that corresponds to the public key on file, then you should do what it says, because the only way that, as far as we know, the only way to have gotten that signature on that transaction is me on my phone. And it can't be anyone else on my phone. It can only be me on my phone. And so that is more secure than calling me up and saying, do you know your mother's birth date, or, personal information and so forth, which you're now sharing with the bank, person that you're talking to is now can tell their friends. I mean, that's just, awful security. And so we have the better security, but nobody uses it as far as I know.
Okay.
Is that right? I don't know of a single bank where I can go and put my public key on file and send in an API command that is digitally signed with my private key and have it executed by the bank. Does anyone know of a bank in the world that will allow me to do that? Bitcoin's been doing this for 10 years or 12 years or whatever it is, right? And never been compromised other than there are some interesting hacks, but essentially if you don't make any stupid mistakes, then it's unhackable. And yet I can't do that today.
You are correct 100%.
I always hope that I'm wrong.
I do think there's a couple of nuances though. I think biometric, public PKI, definitely more secure than passwords. Definitely a better sort of consumer experience if you have the digital device. But I think the challenge with banks have been, and I think when you look at digitally native, demand deposit, or whether it be Acorns or Robin, or things that are now starting with one product, now branching out to other products, have to deal with new regulations, newer XYZ, and you have to sort of build out for that. But you're building on a modern platform. When you're looking at banks, you're looking at channels that are branches, then there are mobile phones, there are other consumers. And I think typically banks have been very good at risk management, and that's their DNA, whether it be credit risk, fraud, and they've had teams and teams of people and a lot of legacy infrastructure and technology to manage that.
Regardless of customer inconvenience.
Yes, agreed. I mean, my job is to push newer technology inside the bank. So I'm here playing slight bit of a devil's advocate, but I don't do that at my job. But I think the point is that there are issues or challenges on the other end, or the other side of the table, that can't be completely. It's not, you can't switch a button and say, tomorrow all transactions will be biometrically encrypted, because there are going to be channels, consumers, payments. There's going to be pieces that are just going to fall through the cracks. And that is a difficult thing inside bank to solve for today.
Yeah, but I'm not asking for a wholesale, hey, switch over everything. That's never going to happen. All I'm saying is that, come on. Why can't you have an API interface to your bank which allows me to send you a digitally signed transaction, and it's a new interface, it doesn't disrupt anything, you just add it to the bank, and it becomes a more secure and more convenient way for me to instruct the bank, and in fact, from a security point of view, it's more secure than what you have today.
I don't disagree with you. I mean, as far as being online and being mobile and having, so if you have the new mobile app, that should do exactly what you're saying it should. It doesn't solve for all channels, but yes, for the mobile experience, consumer experience, we should be there. Or not. I think some banks have played with it, adopted it in certain channels, in B2B cases, but they haven't gone out to the consumer. But I think some of the new banks do biometrics sort of part of onboarding and KYC, and even for transaction processing. The traditional banks are just not there yet. They're just slower moving. But I agree with you; they should be there.
Can I just ask, what would that look like from the point of view of a consumer? I mean, right now, when you deal with a bank electronically, you're dealing with it online on your phone or something. So is this something that would be built into their infrastructure there, that you would interface with, on your phone or on your laptop, or what would this look like to the consumer?
Yeah. So there'd be an app that you would trust. Maybe you get it from Google, maybe you get it from Apple, whatever. It could be a third-party app. It could be the bank's own app. I mean, the bank's own app today, in fact, will, when you log in, you can log in now with Face ID, right? And if they're clever, they're actually using digital signature in the enclave as opposed to just releasing a secret from the enclave, which is insecure. But the secure way is to digitally sign that in the enclave. And so your bank app, then when you log in with Face ID instead of typing a password, that's actually more convenient for you, and it's more secure for the bank. So imagine now having a third-party app where your bank app, you're not happy with the features it offers, whatever. Maybe there's a third-party app and it allows you to pay your bills and all the bills come in and you can just hit a button. Face ID signs with that digital secret that's in that app. You put the key for that app on file with the bank, and all of a sudden now you can use your app, this other app, third-party app, as a trusted app. More importantly, though, if you're a business and you want to send in your payments into the bank, what you have to do now is you typically go to the website and you log in with your username and password, and then you get out the secure ID device, or the little touchpad thing where you enter in a code, and then it says, thank you very much, and now do this again, and you enter in another code, do that again, and then you upload FTP, a file, to say, these are the payments that I want. Now, that's a really cumbersome manual operation that's done by a human being to upload a file, and instead, the corporation ought to have, typically would have something called an HSM, which is a device that holds a crypto secret, a private key, essentially, that nobody can get to. And that thing could instead generate use a real-time API to push, as necessary, any kind of payment to a vendor and pay a vendor at the last possible minute using instant payments and so forth. And that's the future, right? We're still in this very old stage where we do this old-fashioned authentication with all these shared secrets, because all these devices with all these codes are all shared secrets. And we all know how easy it is.
I think it's a shared secret.
Huh? No, you don't think it is a shared secret, but it is, right? So the bank actually knows that, and so if the bank gets broken into, and there are two types of companies. There are companies that have been broken into and know it, and there are companies that are broken into and don't know it, right? And so, because these secrets are there, it's a vulnerability. So, getting off of that and doing something more convenient like these, Face ID and so forth, is just it's more convenient for the user, and it's actually more secure for the bank.
Yep.
Right.
Okay.
So one thing there, just I guess counterpoint is that how many people here have ever installed an HSM? Okay, this is why we don't do that, right? I mean, it's,
Well, yeah, but you can't use it. That's the thing. It's a little bit of a chicken and egg.
Well, and that's the problem, right? Chicken and egg problems are notoriously hard to solve. So I think the key question there is the pain big enough to go through that transformation? And I think the answer as of today is no, right? Otherwise,
If you talk to the people in my finance department, they'd say, this is outrageous. To make one payment, we had to do one payment today, and it took me 15 minutes to go through the process to make one payment.
I think we've got a lot of examples of where payments could become a lot less painful, right? I think we have things like FX, we have service fees, we have the challenge of going and getting a cashier's check. A lot of these are normal behaviors today, and I think I understand your point, Steve, in terms of where we can go. And the ability today to eliminate checks could be solved in many occasions. I do have kind of not interesting, but I don't know if you guys ever saw the video. I look at people that are kind of creating their own market need out there. So there's a video that shows somebody walking along with a device that's supposedly scanning the pocket and wallet of people that have NFC in their cards. Have you guys seen that? It just shows how they supposedly make transactions. Well, the reality is, the guy that put that video on is selling wallets that are supposedly NFC chip protectors, right? To bring that back to what we're talking about today, I'm pretty convinced that the people that are insisting on really challenging passwords, you have to have a capital letter and you have to have a number and you have to have a character, are the same people that are servicing the bank when people call in because they can't remember their password. So they're kind of creating their own market there. But from a payments perspective, I think simple payments, faster payments, safer payments, there's a multitude of solutions that are out there. I know the card networks, obviously, with Visa Direct and MasterCard Send among them. RTP, real-time payments. There's a lot of things that are trying to go on between the banks, but the problem is you have to have a sender and a recipient. You can't just have somebody that says, oh, this is a really cool way to reduce my check issuing portion of my business and I'm going to use this if there's nobody they can send to. So let me switch gears a little bit, and this is more of a no wrong answer, but I'm going to throw a few typical banking financial industry buzzwords out, and I'd like for you guys to just kind of take turns. Maybe Jason, we'll start with you. Of the following words with AI, blockchain, there's actually, if you can use all three in a sentence, you get the trifecta. But between AI and blockchain, robotic process automation, which is becoming very big, big data, voice interface, which is basically chat bots, and cloud computing. Tell me a couple that you think are really truly going to be adopted. We talked about a lot of need here. We talked about a lot of technology that not everyone's going to grasp. But where do you see, as the banking technology continues to evolve and ideally become better, which ones do you think will be grabbed onto the most?
I think big data is the easiest one because that's happening already. It's AI, real AI, maybe in the mid and distant future. The bots, obviously, for service, that's an easy win as well. It's happening across the board. Blockchain.
You can only pick two.
Those would be the big ones, and I'd say the big data and the bots, I think, would be, if you had to invest in companies that are going to be used in the next year, those are going to be the ones.
Big data and what?
And the bots. The chat bots and stuff.
Voice interface.
Yeah, voice interface.
Yeah.
I mean, it's happening, right? So everything else is.
And you usually know it, but not always.
Yeah, I mean, they're getting really good.
Yeah.
So it's quite interesting.
Mesh?
I was actually going to pick the same two, data and AI, big data and AI. I think that AI is going to continue to be front and center, especially in the, when you're talking about banking and FinTech. Just so many applications of AI and machine learning that you can apply, things like underwriting, personal financial management, which a lot of that is really just looking at data that you have from the user and being able to offer very sophisticated financial advice to that user. I think we're just scratching the surface on that right now, and there's so many more applications of that can be applied, especially within banking. So I think that's just going to continue to take off.
Great. Okay.
So I'll go in the other direction. I think the ones that is definitely happening now is cloud computing. If you look at the cores that were selected by certain neobanks, and that they're cloud based, right? This is where the advantage is going to be in banking: is can you be agile enough, and the traditional mainframe cores just cannot. And the other one is RPA, right? Getting the back office more efficient has to happen, and I think there's a lot of investment there.
What do you mean by the cloud? Can you explain a little bit more, good example?
Moving things out of IBM mainframe on-prem into Google Cloud infrastructure, AWS.
They haven't done that?
They have not. They are doing it, right?
Yeah, because you have to get approval from all your regulators to be able to do that, and then you only do it for certain data warehousing type of applications.
Steve?
So it's, if I pick two, I'll pick AI and blockchain. And when I refer to blockchain, I don't mean the Bitcoin blockchain, and I don't necessarily mean traditional DLTs, general purpose DLTs, because they're sort of rate limited to like 3,500 transactions a second with 1 second latency and so forth. But you can take sort of the similar concepts of having a secure shared infrastructure, and you can scale that to millions of transactions a second. I think that's really, really powerful. And I think actually going to a centralization of that sort of thing has a lot of benefits. Counterintuitive.
Great. Josh?
I think I'll pick one of each. So I think AI has the most amount of sort of impact and investment that's happening. The returns of that is going to take some time to see. But I mean, the first places are fraud, underwriting. Those are sort of the risk management areas where you have a bunch of data, you can already apply to it. Those are happening and will continue to happen, but I think it has a tremendous, it's like a capability that will continue to get a lot of investment. The second one I'll go to is sort of process automation, which is just it's really not a future type thing. It's just it's already there. It's legacy infrastructure. It needs to be simply coded before it becomes smart. And I think that that's
and
already happening.
replaced, right? I mean, it's to replace what you're currently doing to make the efficiency.
Exactly.
Yeah.
So I think those two for me.
I'll pick AI and cloud computing, and I'll put a security perspective to this. In security, one of the big problems is that you can have so much alerts, logs, anomaly detection that you don't have finally a human or a decision-making capability to deal with all the signals you got. So that's where AI comes handy to help take more optimal decisions on the events or the logs. It's already being generated, and there's no way you can have humans to have all the alerts being checked manually on a regular basis. And although cloud computing is a 20-year-old technology, but in terms of when we talk about large banks versus neobank, almost as much as I have insights into it, that pretty much you can see that most of the neobanks or the technology-savvy FinTech companies, they are almost entirely on one or the other cloud platforms, including our company, and we are totally on AWS. So from a business continuity, disaster recovery, backup, replication, and even managing security at scale, there are a lot of advantages. If done correctly, cloud provides opportunities to do security at more scale and with more confidence, which advantages are lost in a traditional on-prem setup. So obviously, if more larger entities focus on the cloud and do cloud correctly, then that has a potential for them to bridge the gap of agility or the speed that they might be missing today.
Okay. Sure.
Yeah, I'll definitely speak to voice, voice command or voice interaction and chatbots. Being branchless, Varo, one of the things that Varo prides itself in the most is like exceptional and attentive customer care. I think that as people become more comfortable with voice assistants and their connected devices, it'll be a really exciting channel to answer consumer questions and interact and just have another touch point with customers in a way that's, again, meets their needs of like immediacy and efficiency. And the second, I think, is AI or, I think AI and ML are usually bundled together in the sense that finding ways to build models and improve our software so that it can make more decisions in real time and on an automated basis. And this will be really helpful for banks and all the financial services that are really stitching together a lot of KYC, risk, transaction, just multitude of data streams to know what information to make a decision on, depending on the type of transaction or the point of sale.
Okay. There was 3 industries when we talk about automation that were deemed from a workforce perspective to have the biggest impact. One was quick serve restaurants, and you guys have already seen that from the push to order in advance on an app or a kiosk that you get there, and they want you to place that order and slowly eliminating the jobs there. The second was truck drivers, because they think that automation is going to autonomous driving is going to kind of replace that and have these trucks driving down the road by themselves. I'm not sure how I feel about that yet, but it is pretty funny living in this area and seeing the cars driving around. But that was the second one. The third is financial planning. So I actually want to kind of start off with you a little bit. The idea is from a financial planner, the need to interact with somebody and take their word and whatever services they're relying on for their information as the way you should plan for your financial future. And that's going to become either hopefully more sophisticated or more common and that a lot more people can take advantage of it. But I know from Moneyline, you probably have some experience there.
Yeah, I mean, in the end, it really, it comes down to data. The more data that you have on the user in terms of their, spending habits, having access to all of their linked accounts and seeing where their assets are kind of located, the better decisions that you can provide to the user. Many of kind of these human financial advisors, that's what they attempt to do. It's really difficult to keep that data fresh and be able to make decisions continuously. So with the technology and the AI that's being leveraged now, we can, computers. It's just been proven that computers really can make better decisions. They have the data. They can continuously kind of look at that data. The data is always fresh. It's something that cannot be leveraged to the extent that humans can. So I think someone said that there's still going to be a little bit of a hybrid, and it's not going to be we flip from one to the other right away. People's finances are complex, so it's going to take some time, but that's definitely the direction that I think personal financial management and financial advisory is moving towards.
Anybody else on the panel want to comment on services they see automation taking over for the bank, either replacing or potentially adding additional services down the road?
I know I would like for the KYC and onboarding that whole piece to be, that's the biggest sort of operational cost and expenses, I think, for any bank.
A biometric and a blood sample and.
Yeah, so what Steve was saying. So I think that is the biggest hurdle, but I think it's also very, very complex and a lot of regulatory hurdles. And I think financial planning is it's one of those things that I think if in an ideal world, full transparency, all data available, all data accessible, and a machine can do the best job for you. But I think in reality, you don't want 100% transparency all the time. You want separation. You want the ability for privacy, and hence the CCPA data privacy. So I think there's the aspect of technology-driven 100% pure AI delivering the best value, and then there's the aspect of humanity and sort of privacy and ability to sort of keep things in compartments and regulations. And I think there's still a ways to go before we get to utopia.
Yeah. Anybody else?
Sure. So on the biometrics and stuff, we're using that now. We went from documents and a very kind of bank-oriented view to recording videos of the clients and stuff like that. So we're seeing that kind of happen. And then on the servicing, I think the analogy I use is like for acorns, saving a few pennies. You're always going to use the computer's the best way to do that. You're not going to talk to a financial advisor. Hey, should I round up 20 cents on this Starbucks purchase? But when you've got a certain level of wealth, whatever that is, a few $1,000 or $100,000, you can have the computer say, oh, this is the best system for you. You can use Betterment, Wealthfront, all these different ones, and they'll give you variations. It's 95% the same. But I think that's where we see people want a person kind of saying, hey, let's talk about this and let's kind of go through this with you and not just get alert. And I use a metaphor for there's a lot of gym apps to go to the gym. I don't know how they work for you guys. Do you get up at 6 a.m. to go? But if you've got a trainer and you're paying them $50 an hour, you're going and you're listening to them while they yell at you versus your little app buzzing for you. So there's a humanity that each person deals with too. So I think that's.
I tried the sleep app on the iPhone. It's just not working for me.
That's going to come in. Go to sleep.
All right, let's open up the questions. We have a few minutes left.
Hey, I got a comment because you were asking, I think before, Steve, you were talking about has anybody seen anything where you get a public key and a private key, etc. I just want to make a comment. I'm not an expert on this either, but there's that company out of Canada called Secure Key. It's doing something with verified.me. right? And more on the identity part of things, right? But I also think, and you and I were both at Visa for a while, and if you go to payments and look at NFC, Visa tried to do it forever, right? The phone consortiums tried to do it with
Tokenization.
NFC payments it basically took Apple Pay to do it, right? And I think you brought up a great point, because out of Canada, it's like, I would say if banks would, band together or something like that in order to do it, but the banks can't. It took Apple to actually push NFC payments because they controlled the whole ecosystem. That's just kind of my comment
Or
there.
they meant to think they did.
Yeah, well, they did it, right? In the end, it was like, because the technology existed for 10 years at least before Apple pushed it hard, right?
Yeah, so I mean, there's something in Europe called PSD2, where the banks are required to open up their APIs.
Right.
And the unfortunate part of it is that they said, well, we want you to use this third party in the middle that is the middleman between you and the bank. And they're using public key infrastructure to prove who they are. So, it's sort of like that. But you really want to be able to not have a man in the middle, because anytime you have a man in the middle, there's the man in the middle attack. So we are getting there somewhat slowly, and unfortunately they set up the regulation to have this person in the middle because they thought, layers of security, so we shouldn't just open up the banks to everybody like Bitcoin because that would be unsafe. Let's have a man in the middle like what was the Bitcoin exchange that Japan, Mt. Gox, thank you, because that's safer. You're not going to deal directly with Bitcoin, you'll deal with Mt. Gox, and that will be safer. And I mean, this stuff is just not true. But people will eventually figure it out. We'll eventually get there.
Josh,
Yeah.
okay. Another question.
How are you competing with or comparing with Ripple on what you're doing? It sounds like you're doing something
Simple. Well, so Ripple has a problem because of GPI kind of. So Ripple is just Swift with smarter payment routing. And so Swift with GPI has made it faster and easier and so forth. And so you can think of Ripple as a better version of what you have today, but it's still using correspondent banking. So in Ripple, you're still going from bank to bank to bank to bank to bank to get there. And in our system is, if everybody knows how FedEx works, right, all your packages go to one place, I think it's Memphis, Tennessee or something, and then it goes out from there. And so we do the same thing, that all the banks sort of bank in this central location and have accounts there. And so if you want to switch the money's not actually moving, it's just going between two accounts at the same place. So Ripple is doing it the old-fashioned way, and that's just always going to be inefficient. And so this is the most efficient way to do it, because it just happens in a fraction of a second to do a cross-border payment or to do any kind of payment. So better technology, better architecture, and I think
What about IBM's World Send, whatever they call it?
the WorldPay,
WorldPay.
thing that was based on Stellar. So that's just not going to fly. I mean, what we did is we said, hey, where's this going to be in 5 years from now? And we saw the trends for central banks issuing their own digital currencies, and we said, okay, that's going to happen. There's too much of a momentum behind that. And so it's really going to be the banks that modernize. And if the banks are modernizing, they can't use things like Stellar or any kind of public blockchain, because the regulators are not going to allow a bank to be dependent on something that is not under control of the regulators and has the data that is not sovereign. So we said, hey, we have to create an architecture that's going to work in 5 years from now, and in 10 years from now, and in 50 years from now. And the way to architect that is to do it this way. And so we actually worked with the former head of payments at HSBC and designed a system that works like the banks like to work. And so it was designed actually by a banker and a technologist, as opposed to some technologists who thought of, hey, this is how it should be, and then they try to morph it and try to find product market fit. There was a lesson there. Yeah.
One last question. Yep.
So I've been back in the US after living in Europe for 4 years, and I quickly discovered that the US is probably 25 or 30 years behind Europeans in terms of payments. Clearly there's been...
But there's FedNow, and FedNow will deliver tomorrow, from yesterday's technology. So we'll deliver a 20-year-old faster payment system in about 10 years from now. So there's hope.
Well, clearly there's been a meeting of the minds between banks, industries, merchants to develop seamless payments, right? Including AR and AP and the whole lot. So I'm curious from the panel, is there any appetite out there for development of standards? And if that happened, how would that disrupt you guys?
All right, so someone's taking that. So there is a standard called ISO 20022.
Yep.
So 20022 is basically the Swift MT messages kind of on steroids and sort of the next generation of that. But these are for messages that banks send to each other to move money. So it is a payment network. And so the problem with that is that payments are excruciatingly complex. And the more you know about payments, the more you know that you don't know shit about payments. Right, and so, it's kind of like you thought you knew it all and then you discover, oh no, I was wrong. And so because it's so complex, standards are not necessarily the right approach to solving that problem, because as soon as ISO 20022 is published, it becomes out of date and people have to extend it in incompatible ways. And it's so complex today, even now, that people use it in different areas differently. So the same ISO 20022 message that would be interpreted correctly in the US would not be interpreted correctly in the Middle East. So don't assume that standards are the way to go. And we've seen this before. This is like the business as usual problem, which is each area creates their own little, we're gonna fix it we're gonna have a faster payment system in Singapore. Okay, it's gonna be different than the faster payment system in the UK, which can be different from the faster payment system, and they can't talk to each other. And if they did, then they'd have to have, all of these things. And so all we've done is we modernized the whole mess that we have today, and we have moved it into another mess with modern technology, but we're in the same mess. And that's not the best way to do it.
Okay.
So compare that with something like the internet, right, where it's uniform everywhere, which is awesome. APIs, PSD2 APIs, completely non-standard between bank to bank to bank. Even in the UK, the APIs for this bank, which are all supposed to be on the UK standard, don't operate the same way that the APIs in another bank because each bank implemented it differently.
Okay.
So, standards, doesn't, nice, but not necessarily applicable.
Yeah, thanks, Steve.
I think Ken just wants to have a
Real quick comment.
Yeah, so completely agree with everything there. And so I am on the Faster Payments Council and the regulatory work group, looking at exactly this. On the Business Payments Coalition, which is Fed improvement project around business payments and invoicing and AR to AP, all that kind of stuff. And so in addition to everything that Steve said, which is right, you also have the age-old problem with standards that it benefits somebody and it hurts somebody else. And the incumbents who benefit right now by lack of standards don't want the standards. The incumbents that would benefit by standards do, and there's a whole bunch of elephants dancing around, and I'm just trying not to get stomped on.
Good strategy.
Sarah, last word?
Similar
Okay.
thoughts, but
Okay.
Okay, so
Very well,
maybe
thank
we
you.
give a big hand to the panel. Thank you so much. Thanks everyone, and now's a great time to network. You can speak directly to some of the panelists, absolutely engaging conversation and massive panel. Thank you again everyone.